Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys, welcome back to another live stream. Hope you're doing well and hope you're staying cool. We certainly are trying to. We got our AC in the office building. I think they're going to have it working, but sometimes we get in here, it's a little bit warm, and we're just hoping that this Atlanta heat doesn't kill us. So yeah, we'll see. Hope everyone's doing well. Speaking of heat, we got a little bit of heat in the market this morning. You got the S&P 500 pulling back just a bit, the Nasdaq down 0.25%. And as we speak, I'm updating my profile picture. You guys see my new profile picture on? I don't know if it's updated on YouTube, but I tried to get that going. You ever know that feeling when you get your new profile picture loaded in, you just feel good about it? I took a picture today with enough lighting and editing, and you can make anybody look okay. So that's what I did this morning. And I don't know if you guys can see it, but I'm editing my profile picture as we speak. Let me just get a little bit. All right. Yeah, I think that looks pretty good. All right. Sometimes you get it's like walking in on. You guys remember Mr. Rogers when we were kids, and you would it was like every episode you'd walk in and he was in the middle of doing something. That's like me every day with the live streams, because the live stream started at a set time, and then it just turns on, and then it's like, okay, I'm here, so I'm doing my ID verification. I'm getting better at multitasking, I'm telling you what. Anyways, terms of things happening today in markets, let's talk about it. Let's look at what is coming down the pipeline. Forex Factory, we have CB, consumer confidence. I actually really love these sort of statistics. Confidence, consumer confidence, and PMIs. Some people love them, some people hate them. The reason I really like things like consumer confidence and PMIs is because they're kind of forward-looking surveys. When you're talking about consumer confidence, the cool thing about this is that if the consumer is kind of signaling that they're feeling better about their personal finances, like if they plan to travel, if they plan to, buy a second car, buy a second house, buy a first house. If consumers are feeling a little bit better, that's really good news for the economy. Because remember, spending is what spurs the economy, what kind of strengthens the economy. And a lack of spending, which often is coincided with weak consumer confidence survey results, is not so good for the economy. So we're entering into this very interesting period where for many months, it was all about the inflation statistics. It was all about whether the inflation CPI, the core CPI, PCE numbers, whether or not they were properly coming down due to the Fed raising their interest rates, right? Fed raised their interest rates, caused the bond market to crash, caused the stock market to have a big sell-off in 2022. And now the question is, now that the Fed has seen inflation coming down, now that we're seeing the effects of those interest rate hikes take place, and we've got this inflation story where inflation is actually coming down now, that's good news. But what you don't want to see come with that would be economic despair or a recession, right? You don't need no editing, Nick. That's very sweet of you. Thank you very much. You're naturally very active. Thank you. What's the take profit for gold longs? I don't use take profits personally. You may, sometimes people will confuse my chart tool here for a take profit level that I have. This is not a take profit order for me. This is just, oh, and by the way, let me do this because I keep forgetting to do it. I need to trail my stop on GLD. So I am 0.47 from my entry is where my stop was supposed to be. So my stop loss 0.47 should be right here, 222.758, 222.758. We got it. Okay. Oh, I can't believe I hadn't done that already. That was just irresponsible of me. I trailed my stop, or I intended to trail my stop, but then forgot to actually do it on this account. So had gold just completely crashed, I could have taken too much of a loss. I trimmed my stop loss on gold. So here's where I'm at with gold. So I don't use take profit orders. I only use, the only way on an execution basis that I will get out of this gold trade, I will 100% have my stop order triggered. That's how I will get out of this trade. And it may be for a win, it may be for a loss. So I'll give you an example. Let's say that gold rounds out and we see gold prices start to head north again. Let's say we break through the highs, we get a nice breakout, clean break. Then what I'll do is I will take this stop loss where it currently is and I'll move it up to, just below that higher low. You might say, well, Nick, what if it comes all the way down and stops you out now? Then it would be unfortunate, but it would be okay because that's what my rules tell me to do. I wait for a key break of structure or a higher low to form in order to trail my stop loss. I haven't really gotten a higher low. And so if this market crashes down, I want to give it the chance to, trade sideways if it needs to. But the only signal that tells me, Nick, you need to get out of this trade is if we break support. So we have support here. I know I'm trading GLD, which is the gold ETF, but it is the same thing as just trading gold spot price, which XAUUSD is gold spot. So, if you're watching gold with me, basically the idea here is that I'm okay with price coming down. Like I am long unless we break this low. If we break this low, we get something like this, then yeah, I need to get out of the trade. Let's do a funk sound for the trailing take profit. I can't do it. I can't do it because, I love that sound effect. Don't get me wrong. But we can't overuse that sound effect. I'll give you a vibey one today. I'll give you a vibey sound effect. But the funk sound effect is reserved for special moments only. If you've not heard the funk sound effect, and it's not funk with an F, it is PH, funk. I think that's how we say it. We had the audience fact check me on that. I think it's funk, like Philippines funk. But anyways, so stock market opens up in 2 minutes. We'll see where this market wants to go. About flat on the morning here. The Russell's giving back a little bit of gains. I am long IWM. And I would not mind. I mean, it's weird. I'm bullish on the stock market, but I also like when the stock market drops because then I can buy stuff that I like. So I always like the idea of a market dip because then I can go shopping for some stuff that I like. I have an approach on individual stocks of wanting to start selling some cash secured puts on some of the names that I like. I currently have a few stocks already long: CrowdStrike, Airbnb, Apple. Actually, Apple is just a free share that I got, actually. I was going to say, how did I get Apple? I haven't bought Apple. I have 0.01 shares of Apple, believe it or not. But yeah, Tesla, Nvidia, CrowdStrike, Airbnb. Market's dipping here a little bit this morning. U.S. stock market is opening up in the next few seconds here. Got 10 seconds to go. So let's just see how the U.S. stock market looks here. And you'll usually see some volatility spiking around this time. You can see the market's already moving. And there is the first 15-minute candle on the 9:30 open. Thoughts on TLT? Yeah, I think TLT is a buy on a longer term basis. Personally, you do what you want. I could be dead wrong about that idea, but I think that the Fed's going to cut rates, and I think that a lot of the money market funds sitting on the sidelines. There's a lot of money. People may not know this. There is a huge amount of money that is parked on the sidelines because a lot of people have been parking their money in the last few years in high yield savings accounts, right? People have been parking their money here, and there's a lot of money that's been going into this. Why? Because the average guy, average girl who's out there not worried about this stuff 24/7 like the psychopaths that we are, they're just saying, I'm doing my business and hey, my bank's offering me a pretty good high yield savings just to park my money there. I'm going to do that. Here's the fascinating part that I think could lead to a rip higher in stocks and bonds and everything else. 6 trillion, that is T with a T, $6 trillion is sitting in money market funds, high yield savings accounts. There is a ton of money parked on the sidelines. Who's got this money? Boomers, millennials that have been sitting on, money. A lot of people have just money sitting in their bank. Now, why is this? Well, the market's been really scary the last few years, right? A lot of people have been really terrified by the pandemic, and then you had market crash in 2022 and Ukraine and Russia. A lot of people get very scared to invest their money. So they just go into something like this. And there's nothing wrong with that. If you don't want the smoke, if you don't want to worry about this stuff, then it's very normal for people to just put their money in high yield savings accounts, money market funds, and just sit on the sidelines and collect some interest. Okay, fine. Here is where things get interesting. So let's say right now you can get 5% in a money market fund. Ta-da, 5%, and I don't have to take any risk. That's amazing. But what if in a couple months, in a couple years, this goes to 3%? 3% and 5% offers are very, very different. Even the average person who doesn't have time to stare at this stuff all the time, right? We have to think about them because that's what's really moving the markets. Fundamentals are not something specific. Here's something I always point out with technicals versus fundamentals, right? Technical traders think technicals are all that matter. Well, that's only the traders of the world focusing on this. Do you know who focuses on fundamentals? Every human on planet Earth focuses on fundamentals. The grocery store is not something that a trader only has to focus on. Everybody focuses on their feeling at the gas pump, the feeling at the gas station, the grocery store, housing, right? Fundamentals is for everyone in the planet. Technicals is only for traders. This is why fundamentals are so important. These are the real forces that every human is contributing to. Technicals is like a tiny sub portion of humans that actually look at technical charts. So fundamentals are huge. So my point with saying that is that the average person who doesn't have all this time that we do to stare at charts and study the markets, they just see, 5%, that's pretty good. 3%, that's not good. Let me get into stocks. Let me get into bonds. Let me lock in some longer term duration bonds so I can keep collecting that 5%. Do you see where I'm going with this? This money, which has been parked in money market funds and sitting on the sidelines, you ready? The window is closing to get this. You're no longer going to be able to get that. If the Fed starts really cutting rates, high yield savings accounts are going to offer a lot less. And suddenly, money is going to go out of these things and into these things. Does that make sense? If that made sense to you, do me a favor and hit the thumbs up button on the stream. It's the best way to let me know that the streams are helping you. If this content is benefiting you or making you more aware of how this crazy market stuff works, then the best thing you could do to support this effort is just hit the thumbs up button on the stream. I really appreciate it. But yeah, money market funds, there's a big amount of money sitting on the sidelines, and people love to debate. Is it going into bonds next? Is it going to go into stocks? You listen to CNBC. That's what everybody's talking about. Oh, money market funds are just going to go into bonds. They're not going to go into stocks. Oh, no, they're going to go into stocks because everybody, all the young people, they only know stocks that go up. So here's the thing. I don't think it matters. I think the question is just, is the money money going to stay in money market funds, or is it going to go into the markets? Because if it goes into the markets, who cares if it's going into bonds or if it's going into stocks? If there's a max exodus of money market funds, if the money piled up is exiting, it's going to go everywhere. It's going to go to gold, bonds, real estate. Money is going to fly out of the money market funds. In my view, this is all my opinion. If you get rate cuts, that $6 trillion is going to get deployed into the markets and rise prices. That is my opinion. Now, the tricky thing here is you're like, Nick, that sounds good. But what I'm not telling you is that people have been calling for this to happen for like 2 years straight. Maybe not that long, like a year straight. So the timing is not easy here. But my point is, now that the Fed is actually beginning the process of cutting interest rates in September, I think that process is going to begin, and it may already be beginning and could lead to stock prices going higher from here. Rate cuts equals stocks rise because people take out money from savings into stocks. That's true, Laura. I do want to add one context piece here. Does the stock market rise on rate cuts? Not always. Rate cuts, and I've said this, I just want to keep saying this because it's really important. Do rate cuts mean stocks and gold? Does that mean they go up or does that mean they go down? The trick question is rate cuts don't determine that. The economy, the state of the economy when rate cuts begin, and when they are in the process of cutting rates, during a rate cut cycle, where the state of the economy is, that's what will decide whether these things go up or down. Rate cuts themselves do not tell you if stocks or gold are going up or down. Okay. Here is the way to tell this. If you get rate cuts plus strong eco, then you get stocks are on top. Okay. Stocks kill it. Gold can do well because gold just wants to see rate cuts, but stocks are king. Gold does well. TLT does okay. But then the question is, rate cuts, again, rate cuts are not the determining factor here. The economy is. What about if we get a weak economy? What if we get labor data that comes in awful and we see the consumers start to dry up and start to, stay home and not go to the beach and not go to buy cars and not go to buy houses because they're hit by inflation? If you have a weak economy, stocks are absolutely not the place. Then you get more of a 2008 vibe, which is not what you want, right? You don't want to see a weak economy plus rate cuts because rate cuts then are just trying to save a weak economy, which just ends up with stocks getting killed. Gold flies. This is where gold and TLT become twin kings, right? It's like a dual kingship, maybe king and queen, right? I think gold is probably the queen and TLT would be the king. The king and queen would rule supreme there. You know why I say gold is the queen? Because I asked my audience at one point, I did this poll, is gold a male or a female? And it was like a resounding gold is the queen kind of thing. So I don't know. TLT, bonds, I think of like bonds as like an old man. So it's like an old king. Anyways, I just want to put that out there because you hear this all over let me, if you take one thing from today's stream, if you hear people saying rate cuts make stocks go up or rate cuts make stocks go down, then politely tell them to turn off their monitor because that is not the case. That is there's been so many people spreading their bias. Rate cuts cause the market to crash. Rate cuts cause the market to pump. No, it doesn't. It doesn't do either one of those. Rate cuts are just a response to the state of the economy and inflation by the Federal Reserve. Where the economy and where inflation is, that's what matters, not the rate cuts. The rate cuts are a response. Are we all on the same page with that? Do we get that? Thumbs up if you agree, if that makes sense, if you get it. Let's take a look at some charts. So look at that. NASDAQ a little bit lower here, down 0.5% this morning. Not really any huge moves on the stock market front right now. Taking a look at gold. I am long gold here. A little bit of a bounce back this morning. I have a little bit of gold in the account, and I have a little, a good bit of SPY and Russell, which is not doing too hot today, down 0.9%. But IWM is my selected symbol there. Also, I haven't received any response on the air conditioning stuff, James and Chandler. Is it feeling any cooler out there? I can't really tell in here because I'm like locked in a box, but it's not that hot in here. Like I'm feeling maybe a little airflow. Does it feel any better out there? Maybe you could check the temperature. What's your zodiac sign? I think is that the astrology thing, right? I think I'm a Sagittarius. My birthday is December 7th. What's your stop loss on Russell? Right here, I've got a trailed stop, 211.18 on IWM. Just below this consolidation before we had the big pop. Well, here's what I want to see. Heat is rising slowly, really? Dang. It was a 77 earlier and 76 in the lobby. Is it higher than that now? 78.3. What the heck? And nobody's responded to my emails. Just the day to day. Nick, you should buy gold bars. They don't have stop losses. You'll keep riding the bull trend. I have a little bit of physical silver, but I don't have any physical gold. I bought physical silver just kind of for fun, but I don't have that much of it. Anyways, Japanese stock market's up a little bit here. VIX is up 3.5% this morning. Now let's see, what are we? So we got consumer confidence coming out here 10 a.m. This is about 15 minutes. Tomorrow we have pretty much nothing, except for tomorrow. You know what we have tomorrow? Tomorrow's big event is NVIDIA's earnings after the bell. That will be the biggest thing. If you're somebody who watches the NASDAQ or you trade S&P or you trade stocks, that will be huge tomorrow. What else? On Thursday, we have preliminary GDP that could be market moving. Unemployment claims will be heavily watched. And then on Friday, you got PCE numbers. Are you streaming on NVIDIA? I'm thinking about it. I'm not sure. So I'm thinking about doing the NVIDIA stream. I'm not sure if I'm going to do it. Anyways, a lot of stuff is, I'd like to just also take a look at the top setups. Let's see if there's anything that I'm supposed to buy today or sell today. Pound USD, AUD USD, Euro dollar. Let's just look at some currency pairs briefly. Euro dollar, nothing to do. I like it on the long side, but it's moved too far for me. Pound dollar, same thing, nothing to do. Aussie dollar's hitting resistance. I am bullish, so I'd either look for a break and retest or a bigger discount. Maybe on the AC front, maybe someone could walk down to the main lobby and see if there's anything, any updates, or if you see anybody working out there. I sent an email this morning to our building management, but It is a little bit warm, and I really such a frustrating situation. If anybody has, if anybody is a business owner, you know how frustrating it is when like Wi-Fi is down or ACs. It's like, are you kidding me? You're gonna cease operations for the day for my company because of that. What do you think about NZD USD, Nick? NZD USD bullish setup on the edge finder. Let's take a look at it. Yeah, look at that big break through the highs. I'd be interested in this one if it pulls back here a little bit. It's had a really good move to the upside, really strong break. But I'd probably need to see a pullback personally before I can get anything on that. Taking a look at yen pairs. Sure, let's look at yen pairs. I know that the Edge Finder has got some bearish setups on a lot of yen crosses. Dollar yen, Swiss yen, CAD yen, Euro yen. So dollar yen. I mean, here's the thing. A lot of stuff, I have a lot of potential trades to take, but just nothing really setting up. Like nothing is on a price action basis pulling back for me to get good entries, which is fine. I'm in a lot of trades that I'm just letting like kind of do their thing, but not always exciting for streams because people are like, what trades are we taking today? And I sometimes just have nothing. So pound yen, can't touch that one. It's getting a neutral read on the edge finder. What about euro yen? Euro yen might be setting up something. Nope. Already kind of broke lower. CAD yen, not a pair that I usually trade, but we'll pull it up just because we're looking for stuff today. But this is pretty much my process every day, guys. I mean, I go neutral, I take out the neutral readings, and then I look for pullback setups that match up nicely with the edge finder. I do my research, do my risk management process, and then I'm looking for setups that make sense on it. This is really specifically what I do. I take out minor currency pairs, and this is my full watch list currently. So if something is getting a bullish reading or a bearish reading, the thought process is, okay, that doesn't mean I go outright sell it. That means I go look for good opportunities. So as an example, dollar yen, if I was going to short dollar yen, what I'd want to see is a good technical reason to do so. If you sold a 38.2%, then look how beautiful that was. But for me, what this means is I can't really touch this unless we either get a big break through the lows and a retest, or a deeper retracement, maybe up to like the 50% retracement. So there's just nothing for me to do other than wait and come back the next day on dollar yen. There's just nothing for me to do here. And I start losing money if I start just forcing trades, right? Sometimes not placing a trade is literally the best thing that you can do. Dollar Swiss, bearish readings. So let's look at dollar Swiss. Yeah, here's an interesting one. So dollar Swiss is almost back down to the lows. If you get a break through the lows here, there's a nice trade setup. I like that a lot. We have confirmation from the edge finder. Things are looking good. And also, I should mention this. I haven't mentioned already. The edge finder is currently 35% off. If you guys would like to get access to the tool for a huge discount, 35% off is currently available. And for payment options, Ravindu, just send us a message on this link that we're dropping here in the chat. We'll happily get you set up. By the way, guys, check out the new profile picture. I took that this morning. Very proud of that one. No editing on it whatsoever, I swear. Anyways, guys, 35% off. If you guys would like to get access to the Edge Finder, send us a direct message. Someone from our team will hook you up with a copy at a really discounted rate. And we do accept crypto. We do payment options, payment plans, if that's something you're interested in. So whatever would be easiest to you. We do have a couple people on staff who can give you some information about our current discount. Again, it is 35% off currently, which is, pretty big haircut on the usual price. Do you own any cryptocurrencies? I have a little bit of Bitcoin, but not really. A little bit of Bitcoin, tiny bit of Ethereum, but I'm not really a big crypto investor per se. I just, if you're asking me like, where can I, if I'm asking myself like, what do I want to put my money into? I just feel way more confident buying good companies or uh, really even trading commodities, maybe like owning some gold or silver. But it's tricky on the crypto side for me because maybe some play money, like, but that's about where I stop with crypto because I don't have any strong conviction on where crypto is likely going in the future. I have no idea. Whereas if you ask me about good companies, I know good companies over the long run are going to do quite well. If you ask me, is gold going to go up over the long term? Yeah, it's going to go up over the long term. It might go down for 5 years before that. But over the long term, if you're asking about like investment, I just can't do the cryptocurrency as nearly as much because I don't have any conviction there. What I've found is that the shiny object stuff in trading is really dangerous. And crypto, as we all know, has been the shiny object of the past. And maybe it'll be shiny object again in the future. But let's take a quick look at Bitcoin. And you can see it's should be. Here's my worry with Bitcoin right now. We've had a pretty risk on couple of years really. Why isn't Bitcoin 80,000, 90,000, 100,000? Why isn't, here's the Bitcoin chart, here's the Nasdaq chart. The Nasdaq's done way better. I mean, not on a percentage basis per se, but directionally it's done really well. Bitcoin went down to the depths and came back. We went down to 16,000. So there's been a huge gain from that crash. But we're still kind of at levels that we were in 2021. Whereas the Nasdaq, had you bought and held Bitcoin until now from 2021, you are at the same level. You have not made any gains. If you had bought April of 2021, the Nasdaq, let's see where that is, April, you're up very nicely. You're up 50%. You see the difference? That's where I'm like, I struggle with that one. It should be performing, and that, sometimes you do have to ask, why is it not already performing? If it's such a, opportunity, why is it so hated in a price response? Sometimes you could be a value investor and you could say, well, but I don't see any, there's no valuation tactic on Bitcoin. And again, I'm not a bear. I own a little bit of this stuff. I think that it's, should do well if you get a big risk on cycle. I just don't feel nearly as convicted as other things. Dow Jones is right near the all-time highs again. Very nice. Let's see if we can take those out. If we're going to keep going higher, you want to see the Dow Jones participating. You want to see the Russell stay strong. At least I do. The Russell 2000 index giving back a little bit of gains here. I do think we're probably headed back to retest these highs here on things like IWM, etc. Let's see what else we got. Dow Jones is still getting a bullish rating. I like that a lot. For me with the Dow, what I'd like to see on the Dow would be a break and retest here. If you get something like this. Oh, why is that an awful color? Hold on. So we're sitting right there at resistance here on the Dow Jones. If you get a nice push through this, pullback play could actually be very interesting to add some of that into my portfolio. That being said, I'm currently long a couple different things. I'll pull it up. I'm currently long SPY, SMH, IWM. So of the index trades that I've got, SPY, SMH, IWM. So I'm long semiconductors, which they haven't been doing particularly well recently. It's down another 0.5% this morning. But we will see. Semiconductors have a big news event this week. The biggest event for me this week will be the NVIDIA earnings that happen Wednesday after the bell. So that is 4 p.m. U.S. Eastern time. NVIDIA earnings will be releasing, which will drastically move the semiconductor ETF SMH. I would love if we see a bit of a bounce back here before then, but it's likely that we're just going to trade sideways into that news event. That you have to understand, NVIDIA is the big dog of the semiconductors. It's the big company. It's the leader of the chip and AI trade. So, and I'm not talking about potato chips. I'm talking about computer chips, right? Computer chip trade is all about NVIDIA and where they are seeing their future earnings going. So if NVIDIA comes out and they say, look, we've got giant orders. We are actually raising our expectations for future earnings for this company. Things are firing on all cylinders. The semiconductor group like AMD and Qualcomm and Taiwan Semiconductor, these other companies are also going to rally because they say, oh, if there is secular demand for chips, then NVIDIA is going to carry the rest of them higher. Not to mention the semiconductor ETF SMH is heavily weighted towards NVIDIA. I could be wrong. I think it's like 20 to 30% of the whole ETF's holdings. Remember, an ETF just holds a bunch of stocks and in one symbol. You buy one ETF, exchange traded fund. It's in the name. It's holding a bunch of stocks on your behalf. You can buy one stock and basically hold a basket of them. So SMH, by proxy, I'm an owner of NVIDIA and AMD, etc. Potato chip stocks, yes. If the whole thing crashes, then that's probably what people will call computer chips. They'll just change the name to potato chips. What are good levels to look for buy entries on SPX and gold? Well, for gold, if we get a retest, so I bought the dip here, which looks made up. Like this entry was too good. I wish I had more like this. I've been saying that every day. Gold dropped into this range. I picked it up. GLD is what I trade, which is the ETF that tracks gold price. And we bounced nicely off that area. So for gold, this is the entry that I got. So this is what I like. If you get another retest of that area, then that might be interesting. Alternatively, if we break through the highs, you may get some nice break and retest opportunities. And for the S&P 500, I have a stop loss just below this level. So if I go to the daily chart, there's a support zone that I'm watching, 55.60. So if we break 55.60, I stop out and I take profits on my S&P trade, but we will see. So we will definitely have to keep an eye on that. But again, I also, for me to be looking to buy these things or sell these things at all, it has to show up on the top setups algorithm, which is helping me to look at the sentiment, like the commitment of traders report, retail positioning, seasonality. And then I'm looking for economic data to line up okay. By the way, check this out. If you're somebody who watches indices, this is on my to-do list. I got to add these to the other scanners. Check this out. I'm clapping for myself. It's kind of cringe. But look, this was cool. So this James and I were looking at this. James is one of our producers here. We were talking about we like to putz around with like the UI on the Edge Finder. Is this not looking kind of clean compared to where it was? If you're an Edge Finder user, I would encourage you to check this page out. If you're someone who watches indices, we haven't done them yet for the other charts. Those will be coming. I started with the stock indices because that's what I'm a little biased towards those things. But here we go. Check this out. If you're somebody who watches the indices, we can now rapid fire go through economic data and say, well, let's say we want to look at stocks. Let's pull up one that has a more obvious example. Let's pull up the NASDAQ. All right. If you're somebody who's saying, why is the NASDAQ bullish? Can we do some synopsis on the Edge Finder to understand why the NASDAQ's getting a bullish reading? Let's do the economic data first. All right. GDP growth, strong. Manufacturing PMI, not so strong. Services PMI, strong. Retail sales, strong. CPI coming down nicely, strong. Core CPI, not as good. NFP, not as good. Unemployment data, rising, not so great. Seasonality, great. Interest rates coming down, great. We just knocked out in a rapid fire succession. We just did a pulse check on where the major figures that we look at, the major metrics of the economy are. And if you're not able to do it that fast, again, that's the point. We just had some data drop here. Let's hold on. Let me go back to today. 103.3 consumer feeling a little bit better here today. That's it's positive. Dollar index probably looking a little bit better here. Let's see. Not too much. So the news just dropped and it hasn't moved. So consumer confidence came in just a little bit lighter. They revised the previous number just a little bit better. NASDAQ did make a bounce back move. And remember, the consumer is really important for business strength or weakness. Russell not getting so much love off that. NASDAQ's back to flat. Same with the S&P 500. So yeah, just a little bit of a reaction there. Now, what you'll notice is that consumer confidence is not on here. Nick, why is consumer confidence not on there? Well, because these ones that we've selected here are the ones that have historically some of the biggest market reactions. We want to look at the data points that cause the market to move, because movement on the market is telling you, oh, the market cares about this, right? So when people say, oh, fundamentals don't matter, then why is that the thing that moves the market the most? Fundamentals, economic data releases, that's what moves the market the most. So it matters the most. So my point is this. We just did a rapid fire pulse check on the economic data. And if you can't do it that fast, I would encourage you to consider getting access to our tool. We've worked really hard on this thing. We've been building this for the last few years. It gets better and better every single month. If you don't have a copy, by the way, it is 35% off right now. So it is a really great opportunity to get a huge discount on the tool and start scanning economic data, the commitment of traders data. By the way, COT also looks pretty strong for the NASDAQ, right? We had a nice bullish shift. More buying happened in the last week. So that factors into the scoring of the Edge Finder. So again, I think that this dashboard looks a lot better. We've also got the put call ratio added up here. So we can see where market sentiment is at. A lot of stuff in one dashboard. So if you don't already have a copy, we've got 35% off going on right now. You can send a direct message to our support team and someone from our staff will hook you up with a nice discount. When is the gold section getting done? We will have it at some point. These things take a lot of time. They may not look like it, but there's a lot of painstaking cosmetic and UI design stuff that goes into them. But that's my job, so I will be working on that. I do mostly most of the UI stuff on the Edge Finder. Most of the layout formatting is kind of my area, and then we've got some brilliant minds behind the functionality, the data curation, the data collection, organizing, the algorithm, all of that goes into this behind the scenes. We've got two other guys that assist with that, and I help as well. All right. I just got an email. So let's do this. Got an email on the HVAC being out, which is going to make me mad. But let's not think about that for a second. We're going to run a quick break. We got, is it Forex James at 10:15, guys? I got to check our schedule. By the way, you guys can always check the live stream schedule on our website, a1trading.com. In the top right, you got live stream schedule. You can always keep up to date with where we're at. We got James coming on at 10. So yes, he is scheduled to take over here in just a moment. So we're going to leave the stream here with Forex James in just a moment. Remember, 35% off the Edge Finder is currently available. We're going to run a quick break. We'll drop the link in the chat if you'd like to take advantage of that. And then James is taking over the show for a little bit. Stay tuned. We'll be right back. If you're looking to add fundamental analysis to your trading, then look no further than our software tool, the Edge Finder. The Edge Finder allows traders to approach the markets by simplifying fundamental analysis into simple scoring systems. We look at economic data, technical readings, as well as sentiment analysis like the commitment of traders data to help traders spot potential opportunities in the markets through the use of data. Our tools allow traders to find top setups each and every day from the top setups page. You can also browse the latest institutional money flow through the commitment of traders data report that we've generated to make it very easy to read. And on this report, you can see everything from the latest overall net positionings, as well as the week-to-week buys and sells from institutional money. The Edge Finder also has a retail positioning tool, which allows you to see what the crowd is thinking about your favorite charts, symbols, both currencies, commodities, and indices. You can also check out the latest seasonal trends, month to month, week of the year, and much more to spot potential opportunities coming up in the future. The Edge Finder also makes economic data much more easy to read, like our GDP charts, our retail sales numbers, PMI data. We can also check out the jobs data, unemployment claims, and so much more. At the touch of a button, you can check out the latest reports from the economic data that moves the markets. Right now in the live stream chat, we'll be dropping a link where you can speak directly to a team member about getting yourself set up with a copy of the Edge Finder today, and we'll give you a nice live stream discount. Click that link and chat with a rep to find out what kind of discounts are going on right now. Now back to the stream.
Hey guys, how is everyone doing? Hope you're all having a great start to the week. My name is James. I'm doing a small segment today. I'm sure some of you know who I am. So, is there any questions, or would you like me to go over the watch list? I'll go over oil very briefly. So, oil is interesting. It looks like we could start seeing some upside on oil. Now, we did see a pump to the upside yesterday with this candle. I was actually caught in this, which was quite unfortunate. I tried to short on a pullback. And then 3 minutes, it was 3 minutes after I entered the trade. This candle formed on some news out of Libya. So that was great. However, having said that, it's kind of been the cherry on top of the cake for me to start looking to go long. So we obviously have tensions in the Middle East. We also have some other factors that I can bring up here. So you can see the reason, despite mixed global demand, supply constraints from OPEC and resilient US production are expected to keep oil prices supported. The geopolitical environment adds to the potential upside risks for oil, so that's positive, particularly with ongoing tensions that could disrupt the supply. Look for entries around $80 a barrel with potential upside towards $90 to $95 a barrel. Now, that's not me. That's come from bank reports, so that's not financial advice. So yeah, looking really for the long term at $90 a barrel, maybe an entry around this 0.5. So this is a 50% pullback of the previous move. So this leg to the upside, and this lines up quite nicely with some H4 market structure. We have also got the weekly time frame here. And we can see the weekly has just rejected this 200 moving average, which on the weekly time frame is quite significant. So you can see we've kind of been bouncing off this 200 for quite some time. I mean, granted, we've broken below. However, we've not held below for very long before coming back up. So from a technical aspect, it looks quite convincing, really. So I'm just waiting for price to come a little bit lower, tag into this fib level. And then, yeah, I'll be entering long. First target at the fib extension. So this would be sort of $82 a barrel, roughly. Okay. Hello, James. Look at silver and gold. Yes, we can look at silver and gold. I'm actually in gold. I'm not sure if I've just been... Okay, no. As I was in the back room waiting to come on, this candle was looking quite bearish. That wasn't very good in my favor. However, I got long on the resistance. It's very similar to Nick's trade. I think I have a slightly worse entry than Nick. Well, when I say worse, both trades have quite solid entries. But anyway, besides the point, entered on this level of resistance. Fib from low to high, as always. That's the entry method I take. As soon as we started seeing rejection of this level on, I think I took it on the 30-minute time frame. After a 30-minute candle closed bullish from here, I entered. Also rejected this this 50 moving average on the H4. The RSI was oversold, so this was a no-brainer trade, really. All the economics and the macros towards gold are bullish. Price action's bullish. So yeah, really looking to take gold into new all-time highs. First target is 2,600. Target after that is 3,000. I don't have any hard levels, so I've not set take profits on here. It's more a case of monitoring how price reacts at these key levels, or these round levels, if you know, whatever you want to call them. These whole numbers, so 2,600, 3,000, etc., etc. And sort of just manage the trade by doing that and trailing the stop. So you can see my initial stop is at break even on the first position, and the second position has slightly over 1% risk, because I use 2% risk as standard. 1% risk is half, so I think I used a roughly 1.2% risk on this scaling. So at the moment I'm up. At the moment on this position I'm up, 2.4%. And this position's obviously break even. So for an outlook on gold, I remain bullish. Got an entry basically where price is now. So yeah, definitely wouldn't be looking to short. The only thing you really need to be careful of with gold is a profit-taking rally to the downside. Now this isn't uncommon. It's happened. Last time we made all-time highs right here. It happened last time here as well. So it's not something you should take lightly, because it can be quite aggressive. And if you're in a quite a leveraged trade with high risk, it could get quite nasty quite quickly. So yeah, just manage your risk if you are buying gold, because buying at all-time highs is never really ideal. However, in this specific situation, I think it's okay. If you outweigh the pros and cons for gold, the pros outweigh the cons heavily. Silver. Now, I don't know why I didn't take this. I'm not sure if I placed this in hindsight, or if I was wanting to take this and just didn't and forgot about it. I'm not sure. However, silver is the same as gold. I'm looking for some upside. However, I don't want to see a pullback, because that would likely lead a pullback on gold as well, and I don't want to have that happen. However, with an unbiased perspective, it wouldn't surprise me if we do see a pullback, just a very slight one, and then I could enter potentially roughly around here. Let's just see. Yeah, so we could get maybe a 50% pullback here. Stop loss at the previous low, so 28.8 roughly, and then we take it up to the previous highs at 32.19. That's the rough idea on silver. However, not really looking to get into silver, because I'm already in gold. I don't really like adding on to other assets. I'd rather just scale into the one I'm in. Euro USD. Let's see. So with the euro, I'm a little bit conflicted, or euro dollar, I should say. I think we are due a pullback. Now, that's not really based on anything concrete in terms of economics. It's more just looking at price action. I think we're very, very extended. You can see the daily RSI here is overbought. The weekly is also overbought. We're very, very deviated from the 200 daily moving average right here. So we are just under, slightly under 3% above the 200, which is quite a large amount for a Forex pair or a currency. So just based on that, we could see a reversion. However, the dollar is quite weak at the moment. The euro seems to be showing quite a lot of strength. The euro specifically, however, is stuck on this level of resistance. Yesterday's daily candle was bearish. Today's candle is not really showing much momentum either way. It's kind of flat, really. So yeah, we'll see. However, going back to the point of the dollar, it wouldn't shock me if we did see some strength in the dollar. Now, it's not driven by economics. It's not to say that, you know, I really think anything's changed or the dollar needs to be higher. It's more a case of, as far as I've read and from, you know, all the research I've done on the dollar, the 50 basis point cut is basically priced in. And that's from the way I see it, that's market participants preparing for the worst. So if you look on the CME tool, which I can pull up now, it seems like the majority is expecting a 25 basis point cut. So you can see 71.5% are expecting 25, and only 28.5 are expecting a 50 basis point cut. So if 50 is already fully priced in, or like mainly priced in, and we get 25, it may cause some short-term bullish moves on the dollar. But yeah, we'll see. Again, similar thing with the dollar. I think it's quite overextended at the moment. So I think just the nature of the markets, we are due some pullbacks on quite a few pairs. Australian dollar against the Swiss. Yeah, so the Swiss is doing quite well. Technically looks very bearish. Let's see here. Yeah, so this this pullback was actually quite perfect. If we look, we've rejected this fib level, almost perfectly. So between the 0.618 and the 0.5 level, the Swiss, I'm quite happy with. I'm actually long on the Swiss on Swiss yen. So yeah, if we look technically, we've got the 200 moving average that's above price. The fast moving averages, so the 8 and 21, which are the red and the green moving averages, are bearish. We've created a lower high. We've rejected the fib level, so doesn't look bad potentially to go short on this one. You just need to be careful because obviously the Swiss is quite a risk off asset, really. So yeah, just pay attention to market conditions. Euro yen. Let's see. Similar thing here, actually. A lot of the yen pairs do look very bearish. As one didn't have quite as much of a pullback. The problem I've got with the yen is that I really need it to switch bullish. And when I say I need it to, the only reason I say it is because I'm in some dollar yen longs and I have been for quite a while. So I would quite like to see some weakness in the yen at some point. However, speaking about market conditions at the moment, it makes sense for the yen to sort of be quite strong, especially as we're heading into elections and Fed cuts, and there's still some tension in the Middle East. I mean, it's not as bad as it was at one point. However, it still slightly risk off. So yeah, that's my view on there. Let me see something actually here. Let's see the okay. So this is aggregated from bank reports. So the Bank of Japan is cautious about rate hikes despite inflationary pressures, focusing on avoiding economic cooling. Market reactions: the yen has gained momentum due to hawkish signals from the Bank of Japan. Governor Ueda, but future rate hikes remain uncertain. So this is something I was saying I think it was a stream yesterday, actually. I don't really expect the Bank of Japan to hike rates this year. If they do hike rates, I expect it to be late 2025. Well, maybe not late 2035, so maybe June to July, August, so sort of midway through. I mean, I could be wrong. That's more of just an educated guess rather than from anything specific. Japanese households are slowly shifting from cash to investments, which could increase consumer spending and influence monetary policy. The dollar yen expected to be influenced more by US economic developments and Fed policy. Can you take a look at NAS? Absolutely. Yeah, so again, what I was saying with pullbacks, I think the market's still bullish. However, it was very extended and we're at quite a strong level of resistance, really. I mean, it wasn't too major, but it was still a level of resistance after quite a large climb to the upside. So I am looking to get in long on a lot of the indices, actually, mainly NAS. And that's largely due to Nvidia earnings coming out later this month. I expect them to be good. Nvidia has been on a rocket ship. It would be very surprising if Nvidia underperforms their earnings. And obviously, Nvidia makes up quite a large portion of NAS. So, yeah, it's more a case of trying to find some sort of entry into this market, which at the moment I don't really see. I would like to see this 50% level get touched, but I'm not sure how realistic that is. That might just be more of, optimism coming in rather than a real view. So I think it'd be quite important really to see how the market moves from here. If we break these lows that we're currently at, this support level, more than likely we could come lower and potentially come and hit this 50% level. However, if this level holds, we could see more of a reaction like this, where we come down a little bit, let some buyers into the market, and then break and retest this this level of resistance that was previously rejected. So something to keep in mind. I bought oil at 76.17. Good hold, I'm thinking. Let's see. Oops. So you bought at 76.17. And I assume it was all the way over here. If you're already in this trade, to be honest, I would be holding. I mean, the trend is to the downside. We did create a lower high. The thing is, the market drivers for oil are quite bullish, in my opinion. So if you're already in a position similar to this, I'd just put stops to break even and let the trade run. But of course, that's just the way I manage trades. It might be different for you. However, if you are looking to hold, I don't think it's a bad idea. Nvidia's tomorrow. It is tomorrow, actually. Yeah, it's 28th of August. It'll be interesting to see. I don't think I'll get that entry into NAS. I forgot it was tomorrow. I was thinking it was still earlier in August, but we're pretty much ending August now. Watch list. I am looking to buy copper. I'm going to make a video on my channel about copper because there's quite a lot of detailed things about this, but I can cover the technicals for you. So basically on the daily, very clear breakout of this consolidation that we had. Consolidation here. And then we had, this downtrend that was quite strong for quite a long time. Actually, when have we been? Yes, since May, we've just been trending to the downside. Now we had this consolidation. We've broken to the upside with quite strong momentum. The 200 daily moving average, the 50 and the 8 and the 21 moving average, all just swept under price really, really nicely. So I am looking to go long, possibly after this stream, but I might be more conservative and wait for this daily candle to close. And if we can close out of this range and engulf the previous candle, that might just be the final entry signal to get into copper to the long side, potentially back to the previous highs at sort of 5-ish. So that's kind of the only thing that I'm watching immediately. We've got Pound Australian that I've been watching for quite some time. I don't like the pound. I mean, I sound like a broken record. I've been saying this for a long time, but I think the pound is very overvalued in comparison to where the country is economically and, economically. So yeah, I would quite like to go short, especially with the Australian dollar. I think the Australian dollar still has quite a lot going for it, really. So looking to short off this 50% level, so fib from low to high, from high to low, we get this level, which was the previous highs, which is, quite a nice level of resistance. So looking to potentially short somewhere inside this zone and ride it down to previous lows, sort of around the 1.89. So around here. But yeah, that's kind of it, really. There's nothing else really exciting. Australian dollar, similar thing, just looking for some sort of pullback here. However, not really seeing too much so far. We did get the previous daily candle. So yesterday's candle was quite a nice bearish close off this resistance. However, today's candle isn't showing much continuation of that bearish momentum that we saw yesterday. So yeah, not too hopeful on this one at the moment. I normally put cheap options for about 30 to 50 bucks. Risk is small and my upside is big. Normally on good earnings, I'll make 200 to 300%. That's really good. If you can make 200 to 300% consistently, that's a fast track to being rich. I love copper. I've actually never traded copper before. The only reason I'm looking at copper is because the trader that I work with in Elite Traders is a commodity specialist or expert, whatever you want to say. And he trades lots of copper and corn and wheat and coffee and things. So he's given me quite a lot of source on that one. So yeah, let me just check. I'm not sure if anyone's on after me today. I don't know if I need to be time conscious. Let's check the schedule. Seems like it's just me today. Interesting. So yeah, feel free to shoot some questions. Let's see. What's this? Dollar NOK. So dollar NOK, again, this is one I've been speaking about quite a lot. And this will be a position trade. It's not something that I would day trade or swing trade. I would love to get short, and maybe I will if we can break past this level of support. So we can see the daily time frame crossed underneath the 200. The fast moving averages as well are still above price, so indicating a downtrend. We've broken the supporting trend line. Now we just need to break this level of support. And that would be a great confluence to get in some sell positions. Now the NOK is projected to gain quite a lot of value into 2025. And obviously the dollar's facing issues, especially weakness due to Fed. So I'm a little bit conflicted on this one, whether to wait and see what the Fed does in September, or whether to just get in with a small position size. And I'm leaning more towards getting in small position sizing. So it'd be 0.5% risk as opposed to my normal 2%, and just see how the dollar moves up until we see what Jay Powell has in store for us. GBP USD. GBP USD reverse. I assume you mean, is it pulling back? It doesn't seem to be, no. So I think with the pound, we've already kind of broken this level of resistance. I mean, we didn't really see any slowdown here. We saw 2 wicks to the upside, followed by a really strong bullish candle. However, just following basic rules of technical analysis, we could be in for a pullback. We're 4% above the 200 moving average. The daily RSI is overbought. So whether we'll see a false breakout here and we'll suddenly just turn bullish and have a correction, I don't know. Unfortunately, I wish I could tell you if it's going to reverse. I'd be a very rich man if I could forecast that type of stuff. However, there are, in fact, I'll pull it up 1 second. Let's see if I can find the level. Yeah, here. So potential targets are 134 and 1325. So 134 is not too far away. There was also a target, and I can't remember who it was by, but it was at I think it was 1.35. Yeah, okay, there we go. And that was by one of the institutions. I can't remember which one off the top of my head. However, we do seem to be approaching very, very quickly, especially with the this dollar weakness that we're seeing. So I wouldn't really be shorting anything at the moment, especially the dollar pairs mainly. So euro dollar, pound dollar, wouldn't be trying to short this. I'd more wait for the pullback and get in some longs if we can see some sort of pullback here. 2 weeks remaining before Fed meeting, 17, 18 September. What do you think the dollar will do? Will it strengthen before the overall downtrend continues, or 0.25 basis won't do too much to the dollar on the dollar index? Well, I expect we'll have 3 cuts of 25. I don't think we'll get 50 because I think that would just be too aggressive for the Fed. Now, the issue is I could be wrong. However, if that does happen, as I was saying earlier, I think the full 50 basis point cut is already priced in, or is almost priced in. So if that is the case, and this is a big if because I'm not 100% sure, but if we are already priced in 50 basis points, if we get 25, which is lower, we could see a small spike and then sort of a gradual turn to the downside. But that's just, that's more of a guess, an assumption, rather than based on too much. However, the cuts will likely lead to a continuation of dollar weakness for some time. Do I trade US dollar SGD? I do not. I trade commodities, indices, and major FX. I don't trade the sort of exotics and the emerging markets. I should, because there's a lot more money to make in those markets. However, it's just not what I was taught when I was learning to trade by mentors. So never really learned that side of things. I mean, it's not too much different. It's more just the approach and things. NASDAQ up. Yeah, I think, actually, let's see. Is the NASDAQ moving back up? Yeah, it is actually. The daily candle looks really nice. I may go for a day trade on this. If we can get the H4 candle to close bullish from here, I wouldn't be opposed to taking a very, very small risk trade into NVIDIA earnings and just seeing how it goes. And again, when I say small risk, it'd be 0.5%, which to me is fine. I don't mind taking a 0.5% risk on something that could have, a 2% return, which would, doesn't matter. H4 trend's bullish. The hourly's bullish, the daily and the weekly are all bullish. So trend-wise, we're fine. We look like we're rejecting the support quite nicely. So yeah, we'll see if we can get a nice H4 close from here. Swing trades and Forex pairs, please. That's kind of what we've been doing, for the past half an hour. I was told to avoid exotics when I started trading, and I still don't trade them. Well, there's no need to avoid exotics. There, as I said, there's a lot more money to make in exotics because the trends are obviously normally more prolonged. So, if you look at something like the USD try, let's go here. It doesn't take much brains to buy this. It's not like we have much going on. It's more a case of just buy. However, it's not. I say it's a case of buy, but to trade exotics, you obviously still need to understand what's driving the markets. What do you need to look for? What's going on with the lira? Those types of things. So that's what I mean by there's more money to make, because essentially, you could buy this, sit, and just do nothing for the next 6 to 12 months and make money. Whereas in G10 pairs, it's more a case of every day you have to be, what news has come out? What's the Fed doing? What's Bank of England doing? What's the European Central Bank doing? Whereas, as I said here, you can more just buy and hold. However, take that with a grain of salt. Please don't take this as me saying to now go and buy this. That's not at all what I'm saying. It's just more of a general thing. Ivan, thoughts on the yen? Let's see. Well, I think the yen's tricky at the moment, and unfortunately, I'm in the yen. If I could see the future, I would definitely not have taken these positions. But I was basically shorting the yen from about here. So, yes, unfortunately trapped in this move because this was a DCA position. It was a position trade. So it is what it is. I mean, the risk is fine. It's more just frustrating that I'm now locked in. So I think the yen still has a lot of room to the downside in the long term. However, with Fed cuts coming, I think you know, no reason that we couldn't potentially see higher yen, which pains me to say. But yeah, I mean, there's also factors to support a downwards yen. I mean, there's no talks of any more hikes for at least the rest of this year, which does support some bearishness on the yen. But yeah, at the moment, yen's a no-go zone for me. Well, yeah, I'm already in, but when I say no-go zone, I more mean for new trades. How are spreads in exotics? Spreads are often quite high. To be honest, to trade exotics, you would more than likely need raw spreads and or a professional trading account. You can't get a professional trading account unless you normally meet 2 of 3 of criteria. So you need a minimum generally of 500,000 in capital, a degree in finance, or you need a job in finance, I think, off the top of my head. Can't remember exactly what those are. Oh, no, sorry, you need to be regulated is what it is. So I think you need 2 of 3 of those things, which most retail traders don't have. We miss Euro Swiss. Thought it had been to roll over to the downside, but you know why pound Swiss hasn't rolled over yet? I don't know. Let me have a look. So Euro Swiss down, pound Swiss is up. Well, the pound is doing okay. I mean, as much as I hate the pound, it's still not necessarily a bad currency. It's still being supported by a positive view on the government. If we look at the pound here, you know, it's just on a steam train to the upside, whereas the euro is having I mean, it's still on a steam train to the upside. However, it is showing a bit more of a difficulty to the upside. So I think the pound is just a bit more supported than the euro at the moment. Although, you know, the Swiss is still pretty strong. So yeah. Ivan, last time I checked, liquidity was pulled because it's a one-sided trade. Nobody wants to trade try. You know what, Ivan? Couldn't tell you that because, as I said, I don't really trade exotics. I was never taught to trade them. Unfortunately, I wish I was. However, yeah, I think that's more than likely right. I don't know anyone that's shorting USD try and a lot of the other ones. So I think it would be very difficult, really. You could do a long squeeze. You know, you just get everyone to start going short like they did on GameStop, but obviously short instead of long. I'll demo the pair you've just shown for starters, having seen that chart. Yeah, Lee, I don't know if it's really accessible to retail. As I said, I've never traded it, but it's something to look at. If your broker does support it and the spreads aren't ridiculous, there's no reason. Maybe you go and have a go. But again, I'm not an expert on exotics. It's just, you know, I think it's quite an interesting thing to see. You know, we compare this to euro dollar, pound dollar, etc., etc. But yeah, I mean, the reason I say there's more money to be made is because I've got a friend that works in London. He owns a hedge fund, and he only trades exotics and London Stock Exchange and small stocks, because you can quite often get larger, more prolonged moves compared to G10 pairs. He doesn't touch euro or the dollar or pound. Do you teach how to trade? Leah, yes, kind of. I mean, I've got a Discord channel where I send signals, and I've got some educational content in there. We've actually got a promo going on at the moment, so you can test it out. If you go onto our website and wait for the pop-up to show, you can get the first month for $10 compared to the standard $100 that we charge. So if you're interested, feel free to take a look. But yeah. Any insights on AUD CPI? Let me see. I'll be totally honest, my portfolio is maxed out at the moment. And when my portfolio is maxed, I don't look. So let me see. So essentially, when I have maximum positions open that I want to have, I just stop trading. I don't do research. Well, sorry, I do research on the positions I've got, but I don't do research outside of those. Because then, if something's really good, then I start over trading essentially. I mean, it's not really, but I just don't want to pressure my portfolio like that. It's just a personal thing. So we have monthly consumer price index, consensus 3.4, previous was 3.8. Let me see if my handy notebook has any information here. Market position, AUD trading within a triangle range pattern, optimistic technicals, nothing there. Bank of America, yeah, there's not really anything in terms of bank reports here. To be honest, I don't really have much insight here. If you're already in Australian dollar, just make sure you're protected. Sorry, excuse me. Make sure your stops are break even if if you're in a short-term trade. However, as I said, I'm quite bullish on the Australian dollar. One question: what do you think of PCE coming in slightly higher than expected this week, and next Friday NFP comes in again higher than expected? Will the dollar be strong despite rate cuts? I think, yeah. If we see, actually, let me pull up on Edgefinder, and I can show it a bit easier here. Yeah. So this NFP was a big red flag for a lot of investors. Now, NFP has been trending to the downside. You can see it was 272, then 206, then 114. And the cuts are mainly due to the labor market compared to inflation. So it's something NFP is going to be quite a big deal. If it does come in hot, so let's say we get back to 200, well, to be honest, anything above sort of 115, I think would be more of a signal that we're going to almost certainly get 25 basis point cut compared to 50. If we get something that's 114 or lower, it would indicate to me that we are on track for a 50 basis point cut, which I wouldn't like to see. I don't really see happening. But yeah, I just don't see NFP coming out this low again. However, it could. Again, I could be very wrong. Who knows? What's your thoughts on CAD Swiss? Can you do quick 50 min analyzing gold? When you get in many positions, how do you control or got emotions when experiencing heavy variations in equity? Well, that's the thing. I don't really care. Excuse me. When I take positions, it's either, I take three types of trades. So I take dollar cost average trades, which are, for example, on the yen, with dollar yen, I sold here. Then I sold again here. And now I'm in another sell from roughly up here. So I'm in three positions on dollar yen. But all three of these positions, well, actually, sorry, the two initial ones are in quite a large drawdown, but the other one here is in profit. Now, I don't worry about this because I'm happy to hold the trade. I'm quite confident in the long term. Even if we do get yen coming up and we get, the dollar weakening, that's fine. I'll sell again. I'll sell again here. Eventually, I'm quite confident that we'll see the yen come back down. And that's because we did have quite a hawkish Bank of Japan. Now they're not so hawkish. They're saying there's not going to be a rate cut in the near term. And, the dollar is always a good asset. Even if we do see short-term dollar bearishness, the dollar is still a strong asset to buy. So that's essentially the DCA or the carry trade that I'm in. Then I have day trades, which are often very low risk. So I'll normally take 0.5%. Because the risk is so small, I don't really care about the P&L of that. I day trade more because I enjoy it rather than the making money from it, to be quite honest. And swing trades are always research. So I won't take a swing trade unless I have got a full reason for it. So let me try and see if I've got an example. Actually, I did have one. I don't know if I deleted it. Oh, here we go. So this is a good example. So this was I don't think I've got a time on here. This was before we had a lot of the US bearishness. So you can see I was researching different ideas here. So I could say, I was looking to short the USD, but what was I going to short it against? So you had the NOK, which I'm still looking to do. So I list out the positives and negatives of both. Then I weigh them up and say, okay, well, if we look at the positives for the NOK compared to the negatives for the NOK, the positives outweigh. What about the dollar? Well, the negatives outweigh the positives. Then we compare the negatives to the positives of the dollar and the NOK, and we say, okay, well, this is quite a good trade idea. Then I can collect some seasonality. Then I come up with a conclusion. So the point is, my swing trades aren't just mindless trades. There's always a reason. So if it goes into drawdown, I don't mind because the reason is more than likely still there. If the reason changes, then I'll close the trade. Sorry, that was quite a long answer to a basic question, but I wanted to explain that clearly. Thoughts on CAD Swiss? Sorry, I kind of brushed over some of the other ones there. Guys, I'll be on for another sort of 10 minutes. I'll get to some of these questions and then I'll call it a day. So CAD Swiss, did we look at CAD Swiss already? I can't remember. I mean, I've got a position here that I'm not in. But looks great to the downside, technically speaking. As I said, I'm quite bullish on the Swiss at the moment. I'm in a long position. So yeah, shorts from here don't look too bad. We've rejected the 50% pullback. The price is under the 200 daily moving average. The fast moving averages are bearish. Trend to the downside looks fine to me for short positions. But it's not something I would actually take because I'm not really compelled to take it in terms of the economics. But looking at the daily trend, very bearish. The weekly trend here is very bearish. So just following the trend, shorts make sense. This guy's a very good trader and understands price action compared to many YouTubers. Emmanuel, I'm not sure. I assume you mean me, without trying to sound arrogant, but I appreciate that. If you are talking about me. Patrick, you can go to elitetraders.io. You can get access there. If you go on the website and wait 3 seconds, you'll get to pop up and it will give you a huge, it's a $90 discount. So, feel free to use that. We also have, I feel really bad. I'm doing a lot of self-promotion on this stream, which I don't normally do, but we do also have another package, it's $1, which is a one-time fee, but every Wednesday you get free access to the whole Discord. And the reason it costs $1 is just to keep bots out. But yeah, that's a way we can accommodate for people who can't afford the full $100. Because obviously $100 is a lot of money. I won't, I'm not going to try and downplay that at all. Anyway, let's get back to everyone's favorite asset, which is gold. I'll cover gold and then I'm going to head out because I've got other things to do. Unfortunately, I can't sit here all day with you guys. I wish I could. So yeah, gold, very clearly bullish. Now, this is going to be a repeat of what I've already said on gold, so I apologize for anyone that is going to have to hear this twice. But gold is, in terms of the macros, so the economics on gold, it's very clearly bullish. We've got rate cuts, so bearish for the dollar, good for gold. We've got elections, which we could be viewed as risk off, which is the inflow to gold. We've got tensions in the Middle East. We've got tensions in Russia, Ukraine, which are risk off, which is inflows to gold. Safe haven assets. However, the issue with gold is that we did approach all-time highs right here. We didn't make it. So compared to where we were when we created new all-time highs, we didn't quite break above, which technically speaking is a lower high. So that's a little red flag. I mean, it's not a huge problem, but it's one of those things to just keep in mind. The other thing with gold, we created all-time highs, we sold off. We created all-time highs, we sold off. Hold on, I'm just getting a Discord message. I need to make sure it's not, okay, cool. Just need to make sure it wasn't urgent. So it seems every time we create these highs on gold, we sell off. Now, this is mainly profit taking. It's not a case of gold is now a bearish asset, go and sell gold. So when we reach these all-time highs, it's quite, understandable that we get larger market participants that have maybe been in gold since down here and saying, okay, gold's moving up, it's moving up, it's moving up. Take profits here, or we'll take partial profits here. Maybe we'll close out some positions here. etc., etc. So yeah, profit taking dips is something you need to be aware of. Sorry, I just need to undo all these drawings. I don't like having those on the charts. However, let me just show you guys one thing that, you know, if you're in gold, this will be quite a positive thing for you. Just give me 1 second. So when I sent this gold signal, 2 articles came out almost simultaneously. It was like a sign from the heavens to stay in gold. Give me another second quickly here. So this is on investing.com. This is free. You can go and get this yourself. Gold positioning does not look overstretched despite record highs. And this is by UBS. So UBS is an institution. It's not some nerd sat in the bedroom writing articles. The main part of this article was, where was it? Here. Despite the increase in gold prices, UBS assert the market positioning does not seem overextended. This perspective is supported by several indicators that paint a picture of markets that could move far from overcrowded. A market that is far from overcrowded. So that's a good sign that, you know, large market movers or market participants don't view this as an overvalued asset yet. The next one, this is by Citi. So Citibank, again, not someone that you would really want to trade against. The main part of this article is here. The analysts argue that this renewed interest in gold ETFs could drive prices to 3,000 per ounce by mid-2025. Now, this is key. This is a huge thing, because if UBS is viewing this as not an overbought asset or not an overstretched asset, and Citibank see that we could reach 3,000 by, you know, mid-2025, so it's June, July, why not just buy and hold? I mean, don't get me wrong, if you're a shorter term trader or swing trader, day trader, you might get chopped up in some pullbacks. However, if you can get just one really good entry into gold, you can just ride it up to 3,000. Obviously, this is more of an ideal situation. I'm not saying you should now go and buy gold and ride it to 3,000. That's definitely not what I'm saying. But, you know, the idea is there that essentially, if you got a pullback like this that we had down here, there's no reason to take profits right now. There's no reason to take profits at 2,600. You can essentially just trail stops, and either you're stopped out in profit or break even, or you have a huge runner to 3,000. That's kind of the 2 options or 3 options. And obviously there is, of course, the risk that you might lose some money trying to get in. But once you're in, there's no reason to lose money there. I hope that makes sense. Let me just catch up on the chat. A1 guys are on it. Sending the links. I appreciate that. Emmanuel, I appreciate that. So guys, I think that's going to be it for me. Ashwin, honestly, Bitcoin isn't my forte. You're better asking anyone else, literally anyone else about Bitcoin. I can't tell you anything. All I can do is look at price action. Even price action is probably less than mediocre on Bitcoin. I'm not a crypto trader in any way. In fact, just before I go, I can show you my only crypto trade. I'm not sure if this is the right chart. No, it's not. But I bought Bowden, which was a meme coin. I bought it here and held it, and you can see what happened after that. So that's the extent of my crypto knowledge. So asking me for Bitcoin analysis probably won't end out well for you. Anyway, guys, thank you so much for having me. As always, you've been a great chat. And it's Tuesday, so have a great rest of the week. I'm not sure if I'm back or when I'll be back. I don't know. I've not got the schedule yet. But it should be again this week at some point. So yeah, have a great rest of the day, and I will see you all later.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.